Good morning. Welcome to Almus Market Morning. Global equities have continued to be weak, led by fall in US stocks. Now, Nasdaq is entering correction territory, having lost more than 10%. European yields also rose into positive territory yesterday, and sustaining above would be negative for risk assets. It's a big deal for the markets as they have been used to negative Eurozone yields for years. Similarly, a record inflation in UK almost confirms MPC to raise rates to 0.5% when they meet next month. Further indication of tightening financial conditions. So equities are not really in a very bullish phase. Biden coming out and saying that Fed needs to recalibrate support to country or economy in view of rising prices is significant. It cements Fed's hawkish approach in the coming months. In fact, Bank of England Chief Bailey also made hawkish comments. Overall, GBP has held steady despite political headwinds for the Prime Minister. Euro also found good support at 1.1330. Overall, dollar index is still in a very undecided phase. But top side looks well defined. Needs a trigger for it to, have a further move down. In a survey on Fed funds rate, median forecast show 2 to 2.5% as the top of this cycle, and most felt it would be reached by 2024. So most of them said inflation would peak in the US, but will remain well above their target of 2%. Hence, Fed will not break their rate hiking spree until it reaches the reasonable level of 2.5%. On the INR, Rupee benefited due to large bond inflows yesterday, averting a break of resistance at 74.75, despite global headwinds and also higher oil prices. Trend of rising yields is expected to continue as central banks are getting into tightening mode, and this will have an implication for Rupee eventually as the carry related flows will take a hit. In fact, FPI flows this year is turned into negative after seeing a good flow in the initial few days. Expect INR to be volatile amid conflicting forces. Expect it to range between 74.10 and 74.75 for today and tomorrow, and only a break will provide a larger move. Still carry a slight weakening bias for the rupee. Thank you.
Okay. Both Brent and WTI crude oil saw some correction due to profit booking from 7-year high levels. Both benchmark moved lower 1.5% of recent highs, recent peaks. As JK already covered, US CPI inflation saw the 30-year high print of 5.4%, and that's very high for UK setup. Recent continued interest rate cuts by PBOC highlights two parts of the globe. And we are seeing that the Chinese currency is also appreciating. We are getting into point where Chinese export will create more inflation to the other parts of the world. So that's a double whammy. It can happen because China is on a keen to keep interest rates lower. Higher US Treasury yields saw some buying interest yesterday, and there was a very good demand for 20-year option security, and that led into a Treasury yields cool off by 5 basis point. 2-year and 10-year Treasuries are trading at 1.05 and 1.8% respectively. We saw a very good move in gold yesterday of around $25 up move. And this looks like purely on a geopolitical tension between US and Russia on Ukraine. Spot gold is trading at a very important resistance point of around 1840.45. Once it's taken away, we might see further buying interest. Market participants would begin positioning themselves for Fed meeting, which is on next Wednesday, coming Wednesday. And we can see a volatility within the range before this event. And it most likely that Fed will indicate their plan of a withdrawal of a monetary accommodation in coming months and coming quarters. Indian debt market were range bound and 10-year G-Sec yield closed at 660. That's all from me. Thank you. Have a nice day.